Hi, welcome to the podcast of the Indirect Tax Budget. I am Sachin Menon, partner and head of Indirect Taxes KPMG India. Most of you might have witnessed the budget proposals presented by the Finance Minister in the Parliament in the morning. So when we are looking at the provisions which has been introduced through this budget, perhaps most of the people are a little disappointed because the budget cannot live up to the expectation of the people who actually expected maybe some more bold measures in the budget. But having said that, at one stroke of the pen, he has already succeeded in mopping up a budgeted revenue of almost about 45,000 crores. And this is actually through the increase of the indirect taxes by increasing the service tax rate from 10% to 12%, as well as increasing the excise duty rate from 10% to 12%. What does it mean to each of the industry and the consumer? Now, flatly speaking, this is nothing but increasing the cost of services or the price paid by the consumer flatly by 2 to 2.5%. And the service and goods from 1st April onwards would attract a 2.5% more cost or more price in the marketplace. So by doing so, now there is a harmonization between the service tax rate and the excise duty rate, which perhaps would help once we implement the proposed GST. Now, one of the gaping hole in the expectation was that the finance minister was not in a position to commit a probable date for implementation of the proposed GST, and everybody was expecting that. If you look at the sweeping changes in the service tax, the main amendment which has been introduced is the introduction of a negative list. As a result, all these present categories disappears, and all services will be taxed except for a list of services which is published or notified under the negative list of services. So if you ask me whether it means that whether the service tax base is widened, not really, because most of the services are already taxable. Some of the services which are now getting into the service tax fold would be now non-compete fee or demurrages. For example, now those fees paid to the cine artist or directors, etc. These are some of the maybe the not so big but not so small items which would add to the kitty of service tax. And also that the export and import of services rules have been abolished, and that place, the place of services rule which has been proposed, and it is not yet finalized, but it has been proposed for the purpose of debate and discussion, which I say that for the purpose of concluding whether a transaction amounted to export, there are various criteria like in the past, where the service recipient located, where is the service receiver located, where is whether he is receiving money in foreign exchange in consideration, or whether where is the place of the provision of service. And this place of provision of service is a tricky item. If you look at how to decide the provision of service, the rules have been notified which say that almost 6 categories of services within those taxable services, which is the performance-based services, the immobile property related services, the services in relation to those performed by the service provider in India. So there are various categories which has been proposed, and on that basis one has to see that which service falling in what category. Some more simplification the service for the service tax exporters is that you don't have to now prove the nexus between input and the exports for the purpose of claiming the service tax refund. Now, it is enough that if you just have a record of what is that export and what is that proportionate credit is available to you, that is good enough for you to claim the service tax input credit. Similarly, there are some cosmetic changes in the point of taxation rules, which is talking about how many days within which one has to raise the invoice, which is 30 days normally, but then the financial services has given some kind of a leeway to raise the invoice within 45 days. And then recurring services would be considered as a continuing service, etc. But that doesn't pretty much change the landscape of how to decide the point of taxation. Now, coming to the service categories where the recipients are supposed to pay tax. All government services, the recipient is supposed to pay service tax, and legal service also we have to, the recipient is supposed to pay service tax in addition to arbitrators. So these are some of the changes in the service tax law, which mainly contributing towards to the changes, the significant changes in the service tax law. Looking at excise, now the excise duty has been increased from 10% to 12%, and also that some of the cases the service tax or the excise duty or the equivalent cess, that is the cess applicable to production of crude, is increased from 2,500 to 4,500. There are some kind of reliefs given to the industries which are in relation to infrastructure, etc. So generally speaking, as far as excise is concerned, one of the significant changes is that they have given the powers to the designated officers even to conduct an arrest without a prior approval of the commissioner. This means that the commissioners, if once it is notified that what level of officers have the power, that is good enough. A case-to-case basis, they don't have to go back to make an arrest of any of the a person who is accused of evading, which is a dangerous scenario. I hope that they will use it judiciously, these powers which is given to them. And as far as the customs duty is concerned, there is no change in the basic or a peak rate of customs duty. It is going to be the same. However, because of the CVD, the excise duty rate increase, the customs duty is now going up from 26.85% to 28.85%, heralding a significant increase in the customs duty rate. So there are certain exemption given to certain industries like mining industries, as well as the coal industry. The goods imported are now get a concession rate of taxes. So and also that infrastructure projects also get those machineries required for the purpose of the infrastructure projects can be imported without payment of duty. So generally the budget is actually aiming at creating an environment for investment or public expenditure by the government, the infrastructure and power generation, etc. And all probability, government is making an atmosphere which is conducive for a public-private participation in the infrastructure sector. So overall, the budget is as in expected lines. There is no big surprises except for the GST, the date of implementation of GST, and then whatever may be the bold measures expected for rejuvenating the industry and market, perhaps is missing. So it is a budget which may fuel inflation because of the price rise that would cause, but anyway, one has to wait and see how is it really impacting the ground level. Thank you.